And now, let's proceed to taxation under the Americans. The Americans who acquired the Philippines aim to make the economy self-sufficient by running the government with the smallest possible sum of revenue and create surplus in the budget. From 1898 to 1903, the Americans followed the Spanish system of taxation with some modifications, noting that the system introduced by the Spaniards were outdated and regressive. The military government suspended the contracts for the sale of opium, lottery, and mint charges for coinage of money. Later on, the urbana would be replaced by tax on real estate, which became known as the land tax. The land tax was levied on both urban and rural real estates. The problem with land tax was the land titling in the rural area was very disorderly. The appraising of land value was influenced by political and familial factors. The introduction of a taxation system on agricultural land faced objections from the landed elite. Tax evasion was prevalent, especially among the elites. The Internal Revenue Law of 1904 was passed as a reaction to the problems of collecting land tax. It prescribed 10 major sources of revenue. Number 1, license taxes on firms dealing in alcoholic beverages and tobacco. Number 2, excise taxes on alcoholic beverages and tobacco products. Number 3, taxes on banks and bankers. Number 4, document stamp taxes. Number 5, the cedula. Number 6, taxes on insurance and insurance companies. Number 7, taxes on forest product. Number 8, mining concessions. Number 9, taxes on business and manufacturing. And last, number 10, occupational licenses. The cedula went through changes in the new law as the rate was fixed per adult male, which resulted in a great decline in revenues. In 1907, some provinces were authorized to double the fee for the cedula to support the construction and maintenance of roads. The industrial tax was levied on the business community and became a highly complex system that assigned a certain tax to an industrial or commercial activity according to their profitability. The new act also imposed a percentage tax on sales payable quarterly. In 1913, the Underwood-Simmons Tariff Act was passed, resulting in a reduction in the revenue of the government as export taxes levied on sugar, tobacco, hemp, and copra were lifted. To make up for the loss, then Governor General Francis Burton Harrison urged the tax receipt be increased to make up for the loss. Minor changes were made to the 1904 Internal Revenue Act such as the imposition of taxes on mines, petroleum products, and dealers of petroleum products and tobacco. New sources of taxes were introduced later on in 1914. An income tax was introduced in 1919. An inheritance tax was created in 1932. A national lottery was established to create more revenue for the government. However, these new creations were not enough to increase government revenues.